And I think as I see it, because we have heard 3 consecutive presentations, how about we vote or I decide? We vote or I decide? I decide, right? Wow, you have that much trust on me. That's wonderful. So let's have, nobody moves, 15 minutes, coffee, grab your coffee, relax a little bit, just 15 minutes, and come back with fresh momentum and energy. Let's start the panel discussion. So in the panel, next, the presenters, plus we have the pleasure of asking questions to Mr. Abie Sano, Mr. Abie Sano, the President of Commercial Bank of Ethiopia. And he has a lot to tell us. Not only the President of Commercial Bank of Ethiopia, he is also the the Chairman of Board of Directors for Ethiopian Bankers Association. So when he speaks, he doesn't only speak about Commercial Bank of Ethiopia, but also he addresses issues about the banking sector in general. So we take it that unless he tells us, this is my personal opinion, or it belongs to the Commercial Bank of Ethiopia's perspective, we take it as a reflection of the banking sector. Would you agree with me? Yes, right? Yeah, we take him to account. Thank you for putting your hands together. And then Addis Ababa University is a co-organizer of this summit. And we have to listen to what education institutions, particularly the first autonomous university, is going to tell us about helping the problems and addressing the problems of talent gap, leadership, knowledge gaps. And would like to hear from the Vice President of Addis Ababa University, Dr. Jeilu Oumer. He's here. He will also join the panel, along with the presenters. So please, 15 minutes. Do we agree on this? Yes, please. 15 minutes. Thank you very much. See you later. Thank you very much. I hope you enjoyed your coffee and you feel relaxed. So it's about time to have that deep conversation and hear from our panelists, as well as ask questions to our presenters we have heard earlier. So please remind people to come in. We have already started. I know that there was a long queue for coffee. For tomorrow, I believe that would be fixed. So allow me to invite to the stage our panelists. And let me begin with Mr. Abie Sano, President of Commercial Bank of Ethiopia and the Chairman of Board of Directors for Ethiopian Bankers Association. Please. It's here, sir. And the next is from Addis Ababa University, Dr. Jeilu Oumer, Vice President for Academic, Addis Ababa University. Please. And also, welcome. And also, please let me ask the speakers, the presenters who shared their perspectives earlier to come to the stage, Mr. Tewodros and Mr. Godfrey, please come to the stage. And I hope Dr. Aklilu has joined us for the panel discussion. So can you confirm, please? Okay, please check and make sure that he joins and listens to the questions and answers when it's time. All right. Thank you very much. We have a very wonderful lineup of panelists and speakers here. So let me start my question to Mr. Abie. So this panel discussion is on opening of Ethiopia's finance sector for foreign entry and anything related with that. You have looked at the presentations and all conversation since the morning. So my question is, as Mr. Abie, as a chairperson, as a chairman of board of directors for Ethiopian Bankers Association, this is clear how you are giving us your response. Then you can top that with your personal perspective. So do you believe there is sufficient clarity regarding Ethiopia's direction on opening up as we speak for foreign participation? That's one thing. And again, have you put a scenario, any scenario that is likely to happen in the finance sector, imagining like 3-5 years forward? Anything that you have put, if you can share that with us. And you add on that 3 critical areas as president of the largest bank in the country, as well as the chairperson. 3 things you'd like to say, these are the areas that we need to think and work on. The floor is yours, sir.
Okay. Thank you very much for the opportunity, and I would also like to say congratulations, Dr. Gemechu, for reaching this stage. He has
Thank you also for your strategic partnership, please.
He has been single-handedly trying to link us together. In fact, this should have been the financial sector's duty, but the university professor was trying to link us together. For that, I would like to say personally, as well as chairman of the Bankers Association, thank you again for this and for today, for reaching this stage. The questions are too many. I don't know how much we could address, but just we didn't discuss as a Bankers Association on this issue, but as a leadership of the association, as well as one of the bankers in the society, I would like to say what I feel, what would come next. I have served in the banking industry for over 25 years, and it comes from that. Regarding the clarity, that is the most critical part. That defines the next stage as well, and the question is really serious. All what we know is that the government has shown a will that the Ethiopian financial sector will open up. And that will is confirmed by the Council of Ministers statement that was issued in September 2022. But there is a lot to be done so that we understand where we will be heading. There is a banking business proclamation which is in force since 2019, not yet replaced, to accommodate the opening up of the financial sector. So it is waiting for the Parliament's ratification of it. But there are many issues that need to be clarified. I may not list all, but I would like to mention a few, as those are my concerns, even to get prepared for the opening up. Because how it opens up defines how you respond to it, how you get prepared to it. So the issues that need to be addressed is, in the first place, how many banks will be allowed to come to the Ethiopian market? We don't know. 3 to 5, yes, on certain draft documents has been said, but we don't know how that number will be. The modality of entry of the foreign banks is also not clear. Whether banks come in a full-fledged format or just as a branch, partnership, equity investment within the existing banks. All these were options that were just mentioned, but we don't know whether all will be allowed or some out of that. If the banks come in any form, will they be allowed to operate in all businesses, or will there be any limitation on the foreign banks that will be coming? Conversely, will they be allowed to be selective? All these have implications on the existing banks, on the Ethiopian businesses as well. Or will they be obliged to serve the whole society? For instance, Commercial Bank of Ethiopia now have 1,940 regular branches. We have some outlets as well, close to 150. We can say we have over 2,000 branches everywhere, at very remote areas, paying huge cost to serve the society. As of today, only 30 branches are economically, 30% branches economically profitable out of my over 2,000 branches. 30% only. The rest are serving the society, even not covering their own cost. So, will the foreign bank come to invest 70% of its branch to serve the society and work 30% for profit? Or I'm left in the rural and then the foreign bank comes right in the urban. Will the regulatory and the supervisory condition be the same as it is now? At the moment, the regulatory environment is too much sympathetic to the Ethiopian businesses, be it in financial sector or in the real sector. The sympathy is thinking that our businesses are weak. If we are too tight, they may die. That's the concept. That's the way we are handling them. Due to this reason, sorry to say that some of the institutions abuse the existing regulatory system. And I'm not talking only about the financial sector. It is the whole businesses in Ethiopia. If you look into the tax system, for instance, over 10 years ago, Ethiopia used to collect over 11 or 12% of GDP in taxes. Today is barely 6%. We used to work to make it to 17%, just the same as African countries, but we couldn't manage. That means we are not even properly collecting taxes. At the moment, only Ethiopians are enjoying this privilege. Where would they take it? For me, people sometimes talk, some of them may take it outside, but for me, over 99%.
Recording in progress.
The majority of these unpaid taxes will be reinvested and it will going to be the capital of Ethiopia. But what if you gave this business to foreign? Recently I've heard the government permitted even the real sector to the foreigners. At the time when the government even not properly collecting the taxes. So if you don't collect the taxes and allow the foreigners, for sure they will not invest forever in Ethiopia. It will go out. Someone was talking about the capital flight. We will see the real capital flight coming very soon if we are not able to properly regulate all sectors. So lack of regulation, which might have somehow disadvantaged those who comply at the moment, but may not seriously disadvantage Ethiopia as a whole at the moment because it is all the same. You take from one and give to the other. All of them are Ethiopians. They serve the nation anyway, even if it might be unfair for some. But going forward, if you open for the foreigners, we lose it all. The whole nation will lose. Not only the government will lose the tax, but even the nation will lose it. So, how the regulatory environment, be it the real sector or other, the taxing body, the central bank, every institution's regulatory environment needs to be dramatically changed from where it is now. But I am not seeing that. There are some progresses, but it's not enough for that. So when will it be ready for regulating the new financial sector? is a question for me. What about our banks? Will our banks, current banks, be exposed to the new change as they are? Or we should make some changes? Because Ethiopia has been talking about opening up the financial sector for the last couple of years, now even over maybe a decade. But the way we have been going for the financial sector is completely in the opposite direction. 7 years back, I remember the governor used to talk about merger, about very robust plan of raising capital significantly to strengthen the financial sector. But what has happened in the last 3-4 years is extremely to the contrary. We have created, rather incubated, many small, weak banks. This was what has happened. So, would this be able to face the new environment? How could it be? By the way, you need to understand, because there was a question about the same issue I will raise about the talent. The opening up of new, small, weak banks didn't stop with the weakness of the new banks alone. It has made the existing better banks also weaker than before, because all are competing on the same resource, very small resource that we have. So the financial sector is not ready for opening up in practice when we see how it's going. The clarity is not there. The readiness is not there from the issues I'm seeing. There are many other changes that are coming into the market. I don't know how the financial sector, all of my colleagues are prepared, because Ethiopia has been the most closed country. Most closed not only in policy, but also even in attitude. We have no readiness to accept to play with others that's coming from the foreign. But just at the same time, we are working to open the capital market, the animals that we don't know, deregulation of something that we have regulated for many years, the capital account, the real sector that I have earlier mentioned, and now we are talking about opening up the financial sector. Would all these come at the same time? Can we solve this simultaneous equation? Do we have excellent high school students which will do that? It's really very hard. It's only theoretically possible, but practically it has many issues. Many changes are needed to be able to manage all these changes. This is a huge change. We need to learn. When we open up, we don't know how international banks operate. We compete on the banking sector. We don't know how the capital market operates. We compete on that, on something that we don't know, but those who comes knows it better. The foreign exchange banks Ethiopian banks never manage the exchange rate risk. Only the central bank regulation has helped us to manage the foreign exchange risk. We'll be exposed to the risk. We have to manage if your capital account is deregulated. We are expected to manage the foreign exchange risk that we are currently the regulation is managing for us, because the price does not change overnight. We are not going by the market. So, is this people that is assembled in this room ready to manage all these problems together? Do we have that capacity to manage it? Are so many unclear issues for me. The readiness is practically challenged, and the clarity is there, many challenges regarding the clarity. Maybe, since you have raised many issues at the same time, let me rush here after.
I'll come back to you. You still have a chance to answer. I think what you just mentioned needs time to internalize, isn't it? It needs a lot of time to internalize and process. And you know what, Mr. President? They think you are the government by yourself. So that now I realize that that's not true. He's a real banker. He's one of the bankers who is so they think, they say there is a back channel for Commercial Bank of Ethiopia, which is different from the rest of the crowd, but it doesn't sound so. So real issues are surfacing now. So it's time to think. I'll come back to you. You still have time. The panel is yours. And then there is also many questions that are expecting you to come, because you're also the chairperson of the Bankers Association. And one thing puzzled me is you haven't discussed as a Bankers Association. I think it seems to me it's a bit too late, because given the decision, I believe that's going to happen.
What will you discuss? You need
I
to
don't know.
understand the policy first. Yeah, there are things that we discuss.
Yes.
But you cannot discuss
Something unclear.
for certainty if you don't understand
Yeah.
where we are heading.
That's striking, sir. And I think we have regulators in this room. I know quite some of you. And I think transparency and helping the banking sector to think through and strategize, I think there are certain things that need to be done. The message is very clear, because you cannot shoot in the dark, thinking that this is going to happen. Let me quickly move to the next, and then I'll come back to. Do you want to say a quick thing before I come back to you again, or I will come back later?
You have asked me many questions. And
Yes, I know.
didn't finish
I know.
them. So I have to finish maybe if that would give.
Okay, go ahead.
Yeah, maybe there are many things that has put on the table, which was not last. We had a draft of all those things that I have been mentioning, but the issue is we didn't set proper policy direction from the government side. Central bank should really have to put clearly, because this should not be a surprise. This should not be done suddenly. Ethiopia has a reason for closing the market for very long years. I don't think that reason has gone away overnight. So, yes, we have to open up. Ethiopia cannot remain closed forever, but we need to know when we will open up and how. That should be stated well in advance. It should not be a surprise. Something that we have kept it for several decades, we cannot do it in 1 or 2 years. So what I mean is, at least we need to have one strategic period to get prepared with full certainty and clarity. That is 5 years for me, minimum, to be given for the banks to be prepared. The first thing to be done is to correct the banks. Our banks are not really fully banks, because we don't have enough leadership for the existing bank. We have many banks. Maybe we have 5 or 6 leaders that can lead the Ethiopian financial sector. We don't have enough. So we have to strengthen our banks. That's what needs to be done. If we don't do that, what will happen is, if we don't strengthen our banks, basically the first thing the foreign banks, when they come, do is they take our meager talents. We don't have enough. Yeah. They will take it, the best one. They pay the best price for few, but they don't pay the best price for all, but they pay the best price for few. This has 2 implications at the same time. Number 1, we lose that key talent. Number 2, it drives the cost of the remaining whole, even those who are incapable, because they see the best price, the best paid. If you pay maybe 1 million a month salary, all Ethiopian employees, about 184,000 in the financial sector dreams that 1 million. They don't know where they are. Right. So it drives the whole market. That's what it causes. You lose the key one, and you lose the heart and the mind of your others, because they always dream about getting that 1 million over there. So this is a very dangerous thing. And the second one, they lure our high-value customers to them, and the most profitable ones. Earlier I mentioned, would they be allowed to selectively operate? If they selectively operate, for sure, they don't follow my 70% loss-making areas. They just focus on the key best ones, and they take those People, and you lose the key personnel, you lose the key customer. And take best business locations, sectors, the best one. Then they don't go into your risky areas. And our banks, as you see, are very much undercapitalized. Earlier, my Kenyan guy, a colleague, was mentioning about it, how small the banks are. We are very small. Even Commercial Bank of Ethiopia, which was mentioned as a big, is small.
Terms even.
In dollar terms. All what we have is very small. Particularly if you see how the parallel market is going and where our current exchange rate is. Usually those who promote the floating market rate saying that our exchange rate is 120. If our birr has gone to 120, suddenly I lose 50% of my capital. That's where I stand. From where I am now, in dollar, I will go down 50% suddenly. Already it is small. It goes 50% down. All the banks here will lose 50% of their capital suddenly overnight. It is small. If they lose it, that is a consequence that we need to understand where we are heading. Further raise our already high cost-to-income ratio. Most of Ethiopian banks' cost-of-income ratio is very high because we are very much inefficient. We have 31 headquarters for the financial sector where only 5 or 4 was enough. The headquarters, 31 or 32 at the moment. But for this business, for me, 4 headquarters were enough. So you can count 27 or 26 were redundant, and we distribute that to the revenue that we are getting. That's why our cost-to-income ratio is extremely high. So the coming of this will definitely add to our cost-to-income ratio because we lose our talent, the best one, and we raise the pay to retain even the remaining, and then we lose the best customer. We run after the very costly customers, which definitely raise the cost of operation. So significantly, our cost-to-income ratio will significantly impacted. Where will this take us? We lose profitability. So we lose the market share. Ultimately, what happens is the Ethiopian banks will definitely lose the beauty contest in the market. So the best banks are the foreigners. They would gradually overtake our local banks with a small investment. That's what will follow. So Ethiopians will lose the banking sector as a whole. If we are not properly prepared for that, these are the consequences for me. Thank you.
Wow. Thank you very much. I cannot add on this anything and spoil it. This is very clear. So let me move to Dr. Jeilu until they process all this discussion, everyone. Dr. Jeilu, Mr. Abie mentioned the talent issue. First, quickly, I would ask you, what does it actually mean by autonomy of Addis Ababa University that many want to understand? What is different? Because traditionally, Ethiopian universities are island. I'm a part of the university, of course. He's my boss, so when I go back, make sure I don't lose my salary from the university. Okay, so my question is, Ethiopian universities traditionally are islands, so inaccessible. And the same was true about Addis Ababa University until recently. Okay, now let's talk about autonomy. What does it actually mean? We have heard it, but we don't know what it means. And many people have similar question here, I believe. So what is that autonomy brings? How does it change the idea of universities as islands in the context of Ethiopia from experience? And on top of that, after explaining this, what I want to know is every year hundreds of thousands graduate. And the quality is questionable because there is shortage in the labor market. I mean, in the industry is complaining about shortage of experts, talent, labor. And at the same time, there are a lot of graduates that are jumping into the labor market. And now the finance sector has become a victim of that, of not finding adequate and skilled graduates and employees. And Mr. Abie mentioned clearly, when the banking sector opens, one of the things is we have few experienced bankers, not as many, but that is where they are focusing on to take the cream ones, and the rest of the banks are going to be affected. So what is this autonomous university is planning to do to address the gaps in this regard, particularly focusing in the finance sector? It's yours, sir.
Thank you very much, Dr. Gemechu, for the opportunity. Of course, for the questions you raised, I assure you, you'll not be fired.
I have a guarantee.
As far as the questions you raised pertaining to Addis University autonomy and what autonomy really imply, in particular for, let's take these financial sectors, which is entangled with a number of problems that has been raised. To begin with, well, Addis University is the oldest higher learning institution, and of course it has been granted autonomy very recently, maybe some 6 or 7 months ago, and reestablished as a flagship higher learning research university of this nation. Of course, the focus of still the university is addressing the national problems. The priority is to focus on the national problems of the various sectors. And at the same time, we also focus on both regional and global development needs. That's what really mean to be an autonomous flagship higher learning institution. Well, as a university, we have been also focusing in the provision, particularly in the production of the human capital, the human resources, and research outputs in connection with business and economics, which we feel relevant to the finance sector. So being under autonomy, it's one of the factor conditioning higher education to exercise its role in the society. As a university, our major mission is just focusing on generating knowledge, addressing problems, the production, the dissemination and transmission of the knowledge, and the use of the knowledge is of course what the universities mean. So being an autonomous does not mean that it's a private institution. Rather, being an autonomous, Addis University will continue to be as a public institution. However, it's expected really to generate its own income, trend many of the programs, and at the same time, really improving the quality. And the previous point as raised, focusing on the national priorities. So the autonomy definitely gives operational freedom. In a sense, it gives an academic freedom. An academic freedom, in a sense, to develop its own program, curriculum that actually address those national needs. That's one area of the focus to be as an autonomous institution. And then secondly, to be an autonomous is, it is also a center for the talent attraction and talent retaining, particularly in the human resource development. Obviously, at our university will select the best students, and at the same time, the best professors and researchers to do the job. So that's again one area of being, an autonomous. So the journey really toward being an autonomous is, it has, the various, dimension, both in light of, the academic freedom, developing its own, curriculum and programs, and selecting, the best, students, and retaining the best, professors or other, academic staff. And at the same time, being autonomous is capable of, producing really the finance, the income, and the resources that is needed to provide quality education, quality programs, quality research, and quality outputs. So in the past really few months, we have highly working on the various reform that can lead university to be as an autonomous. One area of focus we have been working on that one is just developing a framework, a roadmap, and various policies on both, including the finance, the human resource, and others. As an autonomous, it's our vision is still focusing on being leading research university in Africa, and to advance both national needs and responsive to regional and global needs. For the previous problems, definitely we understand that the finance sector is in a very serious challenge. Just one major challenge is in terms of the human resources, the quality of the human resources we have in this sector. Although we have been producing personnel, the human resources that could serve, but we have realized that still there is a gap. The kind of personnel produced may not be capable or adequate enough really to do the jobs. So noting this problem, as an autonomous, as I said, we have already started reviewing our programs, our curriculums, both at undergraduate and graduate level, so that the kind of the programs that's going to be revised and developed is definitely the one that can address the industry gaps, the skills that's needed, which are now missing in the graduates, need to be critically seen and addressed. That's one approach we can offer really to address in providing capable and skillful personnel, human resources that the industry needs. On top of this, we are also working on a special program, even for those who are in the sector that needs really skill and capacity and competencies for the financial sector. In collaboration, in partnership with professional institutions, we have started developing a framework for to train professional certificate programs, particularly addressing the medium or the junior bankers. So this could be one possible area to address the challenge with the talent the sector is facing, It's not the traditional, program we are talking about, but this is a very highly specialized a program that could be, run in collaboration with the university professors, researchers, plus the professionals, the experienced people, the expertise in the sector. They could, come together, really, train on this area, both in face-to-face, being in training to be, monitored, and that has to be also supported with the digital or on the online program. So the professional certificate program, which we have already developed in a framework, could serve as a solution. And probably when it's going to be implemented is definitely it will be announced openly in the coming maybe few years. As per our plan, we want to really reinstate and place this special certification program for the professionals as of September.
Yeah, thank you. Oh, you have more of this?
Maybe we have also other area of capacity building to offer, particularly for the skill and the knowledge needed. The kind of programs, those who are on job could be also trained. So a flexible kind of program could be also organized definitely with industry to address. In addition, we would also to assist really this skill development with technology, including the digitization plus the artificial intelligence problems as to serve to curb most of the problems that has been raised. Thank you.
Thank you very much, Dr. Jeilu. I think there are good developments going, which I personally also have witnessed. At the same time, I think it's for the sector, the idea of junior banker certification to start is a good news, and which the sector does not have. Usually certifications we know are from abroad, and people have to pay in dollars to get access to those certification programs, and it's a big relief, and maybe more questions will come later. So many things happening, and some observers say in Ethiopian finance sector particularly, in general in Ethiopia, things that are expected to take around 10 years to emerge are happening in 2 years. So why I say this is for the rest of the panelists, for you to think, and Dr. Aklilu is also online, audio. Like Mr. Abie said, 5 years time period that we have given, sir. Does it wait 5 years? We know what so many things are happening from a regulation perspective, but generally for the conversation purpose, do we need to wait 5 years given the global dynamism, the change happening in this country, and what we have experienced? This is one question I pose after I gave opportunity for questions. Then the first thing I want to come back is with this question. And the other thing is, when I was in Kenya recently, I think it was a few months ago or so, we had a conversation with a few banks that we visited. And one question that I remember and struck and still in my head is that we said, who is the largest bank in Kenya? Who is the biggest bank in Kenya? And the answer was, surprisingly, it doesn't mean I agree, but or I really understand, but the response was Safaricom. I was like, oh, what? Safaricom? Okay. Then I started to think, oh, does that mean Ethiopian has already opened the banking sector? What are we talking about? Do we wait 5 years? It's already open. That's the conversation. If we start to think, so opening, are we opening or already opened, given that context? And I want the thinking around here to surface. And now let me give because the speakers, when you start, you can start by reflecting on those questions after we collect questions from the audiences, because you already have given your perspectives, and we want questions to come from the audience. And also, we have more questions for Mr. Abie, which you answer with the questions from the audience. You embed it. I have two more questions to ask you. So let me give chance. Let me ask you two questions, and then I give chance. Is that okay?
Yeah, that's better. Even I didn't finish your many questions.
Okay, then if you continue, then let me add this question on top of it, if you allow me.
Okay, thank you. But briefly, let me say one thing on
Okay.
what Dr.
All
Jeilu
right,
said,
all right,
because
all right.
we are the key stakeholder for Dr. Jeilu.
Yeah, yes.
And I congratulate you for considering the banker certification. And just like to say, just share with you what a theologist challenged me one day. He's just a theologist, a religion teacher, not academia. He asked me one question which I couldn't properly answer. Yeah. I would say after that to the doctor, he asked me he knows what I'm working and my position. We are going for a field work together. He asked me, what are you working now? Just as if he doesn't know me. Oh, I am a banker and I'm a president of a bank. Oh, fine, okay. How many, okay. First, but then he asked me, did you think all your education has helped you to be a bank president? I couldn't understand the question, and then he further continued, how many years did you go to school? I said I counted 12 years from elementary to high school, university 4 years, and again for my master's. I just count and did some maths, and just almost close to 20 years. Oh, 20 years in school. Okay, and he just wait after some maybe hour, because we are traveling long, he does not tell me immediately. He has aim for all what he's asking me. Finally, okay, now you said earlier you are a banker, you are a bank president. How many of those educations were on banking, he said. I have gone to school, but he is asking me how many years of those 20 years you have spent on banking education. I searched into my backup and searched if I could find anything, but I only traced back to bank reconciliation. In my education, that is the only title which has bank. Only because I am accounting student, I have learned it bank reconciliation. That's the only thing I have heard about bank, but I'm leading the bank. Our Ethiopia universities and high schools are educating us many things, but they don't educate us what we are doing, what we will be challenged as we go out of the university. Another thing I would add for Professor is IFRS. Ethiopia adopted maybe about 10 years ago. But I don't know if Addis Ababa University recently adopted it. I have briefly also served as a board member on this transition to autonomy, but I didn't know. No education of IFRS in any of the universities until very recently. I don't know the last 2 years. This is amazing. We have to pay expensive costs to learn IFRS because they are teaching us GAAP, American GAAP. But all our auditors are UK, SCCA graduated certified accountants who do not like to follow the American GAAP. So those are the ones who drive our financial reports. So university accounting graduates cannot prepare financial report, cannot report even proper entry, cannot maintain ledgers properly. So our universities should be problem solvers, should just teach our students something they do as they go out of the university. Certification is the beginning, but why don't you consider the whole course for business? At least for the financial sector, the business college should work with the banks, with such similar financial institutions. Maybe if I said that remark, that for Professor Dr. Jeilu for consideration, you have asked me about the 3 things, top things I recommend, which I missed from your first question. There are many things that we need to do, as I earlier mentioned. Don't put yourself into dark. The financial sector are doing many things, but your question provoked me to say those things, because I don't certainly say anything, but we did several things with several scenarios. If that happens so, if that happens so, it's very cumbersome to get prepared in that way. I wanted to know exactly what will happen, then let me prepare for that. Why do I waste my time with the scenarios that will not happen? But anyway, whatever scenario we follow, there are some 3 important things that I believe would help. But the third one is basically very wide. The first one is merger that I earlier mentioned. We need to strengthen our banks. We don't need all these banks. We need to have some firm, 4 or 5, strong ones that can compete at least with the Commercial Bank of Ethiopia. Then you compete with others. Let's have strong banks. That would help us to get prepared, get a better muscle to compete with others. The second is digitization and partnership with fintechs, which is very critical. We need to work on digitization. We need to work on operational efficiency. We need to work on customer service improvement. This comes through digitization and working with some fintechs. We are buying everything from foreign, but our local fintechs are doing a lot. Let us partner with them, work on digitization, improve customer service and efficiency so that we get prepared for the competition that will be coming. And the third one is a bit general. It is about strategic focus. Every institution has its own. First, it should have some strong bank, then follows strategic focus. What we can do, we should identify our comparative advantage. Many banks would come, for sure, but as Ethiopian, we must have a comparative advantage, the niche where we should compete with any comer, any foreign comer. We can compete. So we need to identify that and focus on that. For me, the critical one is the retail business, where we can do better than anyone who comes. Then we compete with them only on the big fish that they usually focus on. So if we are based on that, they don't try it. That is for us. Then we go into competing with them on the market they focus on. So for that, strategic focus is very important. Thank you.
Thank you very much. 3 things as a takeaway. Now, let me give opportunities to ask questions and then 1 round, and then we give the chance for the remaining to quickly reflect on that. Okay. Oh my gosh, I'm seeing many hands. So, okay, to Abraham here, and then second. Ladies, we need ladies' participation. ለዛጋ 3 አጠር ያለ 1 minute ነው የምሰጠው ባይዘ clear questions. Do I see people from here this side? Yes, 4 and 1 from there. 5. Yes. Excellent. The girl. Yes. 5. So in that order. 1 minute, please.
Okay, thank you. I do have 3 questions. I don't know how I can make it in 1 minute. But anyways, I thank you for the opportunity that is given. Before I start, I would like to thank all presenters for their insightful presentation and for the panelists for their insightful discussion on the session. My question goes to Mr. Abie to reflect on one issue. That is regarding merger and acquisition, and while considering opening up the market, there are issues that are not properly discussed. One is regarding our capability to operate in other markets. when we are opening up, we have to think there are markets also open for foreign investment. So from your experience as a bank operating in South Sudan and also in Djibouti, and as a bank planning to operate in Dubai and so forth, what opportunities do we have to work in other markets? Is it not an area that we need to prepare ourselves to operate when our market is open? Otherwise, the whole thinking seems that Ethiopia is the only place for the Ethiopian banks to operate. This kind of thinking has to change, and we should be able to operate in other markets. Another question I have is regarding merger and acquisition. Strategic focus is important, that's good, but should merger and acquisition happen forcefully or intentionally by choice? This kind of thing is the direction given when we are talking about strategic appreciation of the need for merger and acquisition. So do you reflect on that? The other one is the need to downsize the operation of our banks, because we do have a number of bank branches, even when compared to the size of bank branches in Kenya. In 2022, the Ethiopian total number of branches is 8,250, and in Kenya, it's around 1,475. And banks are the largest employers in Ethiopia. So when we are thinking the burden that we have as a country carrying this much number of branches and the total population of staff in the banks, how do you see the impact on this aspect of the operation and the impact on the total economy?
Thank you, sir. 1 minute, please.
Thank you so much for the great insights since this morning. My name is Girma Abie. I'm a medical doctor, CEO of Liana Healthcare from healthcare company, and chain. We manage chain of hospitals, which is called Yanet Hospital, and I'm also the vice chair for the Ethiopian Healthcare Federation. So I am here today not because I'm a finance professional or someone from the finance sector, but because I just was looking for a potential solution for the challenge we have in the healthcare investment. So really, I'm so grateful for the well-articulated analysis by His Excellency, Mr. President. And but on the contrary, what we have been seeing this morning was actually the benefits and the readiness for the opening of the Ethiopian market for the foreign investment. So it looks like there are things that have to be sorted out and premeditated and come to a consensus. Though I'm not from a finance professional, intuitively we know like we cannot remain isolated. So from what has been explained, Mr. President, yeah, what is your bank association of the banks doing so far, okay, to mitigate the risk that comes with opening up for the banks? That has not been well mentioned, in my opinion. And second is how are you supporting the government or the regulator in building institutional capacity? I think all you have been mentioning melts down to an institutional capacity to regulate, okay? Otherwise, I think there is a consensus on opening up. And as I'm from a health sector, honestly speaking, I feel bad seeing brothers and sisters dying or traveling abroad if they can afford. And Ethiopia losing more than $800 million for medical expenditure abroad. This is happening not because of the lack of capacity to build high-end institutions which can serve our citizens, but mainly because of shortage of capital. So I see this opening up as an opportunity, honestly speaking. If you continue the same way, then citizens will keep on dying, and the private sector will remain as it is. So, and from our experience so far, the health sector is not, the banks do not have really a big appetite to finance the health sector. If we are not able to benefit from the opening up, can your association come up with a certain action where we can have such capital investments on healthcare? And imagine saving $800 million a year in domestic economy will build 5 of the best hospitals that are tourist destinations in other part of the world. So I want to really hear from you about those issues. Thank you.
Thank you. I am Ayala from Addis Ababa University. So I have some comments as well as I have also a question. So first of all, I would like to thank all the presenters for their wonderful insight. When it comes to integrating the international standards into the curriculum, we have integrated international financial reporting standards, IFRS, as well as international public sector accounting standards, international auditing standards in all higher education institutions in the harmonized academic curriculum since 2016. So I would like to, address that issue because particularly it applies to us, and we can also, posit ourselves to institutionalize the IFRS change in the Ethiopian context. Addis University was at forefront, together with the Accounting and Auditing Board of Ethiopia, in pushing the international financial reporting standards agenda in the Ethiopian financial spectrum. So this is just for the awareness. And the second thing, with respect to incorporating banking principles and procedures in the accounting and finance curricula, we have integrated it there. But there is always one thing that has to be clear for the audience. Academic qualification is different from that of professional qualification. Academic qualification aims to develop generalists than specialists. A specialist has to be tailor-trained by the specific institute. We have, as in the morning, Mr. Jesus Workzafu has been claiming, we have risk management and insurance course so that we can introduce them to the insurance industry. We have public sector course to introduce them to the government sector. We have also banking principles to introduce them to the banking sector. We have financial management 1, 2, financial markets and institutions. We have also investment management courses in order to introduce them to the investment and financing spectrum. So we don't train, tailor-made professionals up to now. But today, I think we have heard the good news that Addis University is ready to, develop professionals. So we will also now begin to train professional candidates. To be frank, in Addis University, I could say that significant portion of the lecturers as well as the professors there are members of the SCA, they are members of the CISI, they are also members of the CFA. There are candidates there. So we have to be, a little bit close to the university so that we can understand what is going on in the university. We are ready for the upcoming changes in the Ethiopian context. To come to my question, maybe my question will go to Mr. President, Mr. Abie Sano. I always ask, how do we strategically position Ethio Telecom in the Ethiopian financial sector spectrum? Is it a competitor or is it an enabler? I'm asking this, I always wonder, there is a competition between Ethio CB Birr and that of Telebirr. So is it, competition, or is it, co-implementation, I could say? That is maybe one of the questions that I have. Thank you.
I'm going to go to fifth and go to...
Hello, my name is Bamna Tapte and I came from Unity University, pursuing management degree, and I'm a fourth-year student. My question is not regarding the discussion right now, but it's about the presentation that has been held by Mr. Tewodros Sisay about the preparation of the foreign entries. And the first question is there any specific strategies that can be implemented in order to foster a harmonious synergy among the foreign financial sectors and the local financial sectors, which can maximize the benefit of the foreign collaboration, specifically preserving the unique identity of the Ethiopian financial landscape? And if I'm not mistaken, I have heard Mr. Tewodros mentioning the joint venture as a means of entering, and to the best of my knowledge, I have heard that joint venture is the least understood concept in Ethiopia, and specifically on Article 234 of the business law, it is like the list that it doesn't have a precise conceptualization, so can joint venture serve as a viable method for the entry of financial sectors from the foreign?
Thank you.
Thank you for the presentation and the panel discussions. My name is Betsalol Sagad. I'm a young professional at Ethiopian Capital Market Authority. So my question is for Mr. Aklilu, if you can hear me. It's from the previous presentation. So anyone can answer it for me if they have the answer. So as we know, financial liberalization can benefit Ethiopia in developing the economy, but there was a reason for preventing it for a long time. It's because of protectionism, which is protecting the domestic financial sectors from the internationals, because they are unable to compete, right? But so if you open them to the internationals, as Mr. Abie said, there are some potential consequences. So what measures do you suggest on preventing the taking over of financial sector of the country by the international financial sectors?
Okay. Thank you very much. I think let's address this question. If we have time, we'll come back to you. And I'll give Mr. Abie the first chance, and then we proceed into in the line. Oh, sorry, forgive me. They were so quiet until now. So briefly, quickly, let me start from there and I'll come back to you. I think to be fair.
Thank you very much. Maybe let me start with the second question raised on JV. I think the question is, JV is a least understood mechanism for companies to work together. So what can be done to serve its purpose? In Ethiopia, any international bank coming into Ethiopia, there are very specific areas where they want to do JV. It could be in the investment banking space or brokerage space, because there is no point of actually setting up a JV to form another bank when this existing bank is actually going to compete with this bank. So there will be very specific areas. The banks, the international banks will form a JV to do that. If we are considering international banks, the most, in my opinion at least, the most accessible way for international banks would be acquisition, acquiring Ethiopian banks when they come into Ethiopia. Merger may not work because it's two different countries, two different regulations, two different central banks. So the usual way international banks enter local banks is through acquisition. Can I
address the other
okay.
from the stage?
One of the questions raised is maybe let me start with the healthcare question, shortage of capital. I think this is a case of most industries in Ethiopia, but specifically in the healthcare space. Right now, the biggest demand from foreign investors into Ethiopia, healthcare is one of that. So as long as companies that are operating in the healthcare industry are ready to raise that money, it's actually very much easier for healthcare companies to raise hard currency than any other industry, probably maybe unless it's in the hotel space, which is difficult at this stage. The other option is, I think that's the main point of setting up the capital markets as well, to give you an alternative from the banks for you to be able to raise the necessary capital. either through a bond market or equity. So that would give you now ability to raise that. The other question, I think more of a comment than a question, is Ethiopian banks cannot compete with international banks. What needs to be done to make them more competitive or to protect them? I think the first thing that we need to avoid or remove from our thinking is, why are we saying Ethiopian banks are not ready to compete with international banks? If we look at other international banks, I mean, I can give you a simple example, Kenya. When the Kenyan markets was open in the 1980s, the top 5-6 banks were international banks. Right now, the top 5 banks are Kenyan banks. So one of the key things that Abie mentioned, in fact, out of the 3 things is one is we need to bring in operational efficiency. We need to restructure most of our operations. We need to manage our cost, and then bring in that efficiency. And as I mentioned earlier, and Abie mentioned it as well, strategic focus is very, very important. We need to have a unique business proposition to our banks, to our customers, and then also try to see how we can provide a better service to our customers. That's the only way that you can save. But I can tell you, if international banks are coming today, the first customer they will go to is the corporate customers, not the retail customers. And then they will move into the retail customers later on. So we need to, this is mentioned as well, we need to understand what services are we providing to our corporate clients, what are the type of additional services we can give to those banks. I think the other question maybe is also a comment is can Ethiopian banks now operate in other countries, not only allowing international banks to come. Ethiopian banks actually can operate in other countries. We have very large banks. I mean, CB is KCB plus Equity Bank 1.5 times. Awash is a big bank, Dashan Bank is a big bank. So banks, Ethiopian banks can actually operate in other countries. The only issue is, as I mentioned earlier, is operational efficiency. We have too many, sorry to say this, I know in a country that is unemployment is very high, we have too many inefficiencies. One of the biggest inefficiency is we have too many employees. We have to find a way to minimize this. The first thing that international banks would come in do is use digitization and technology to reduce the number of people that would come in. So as long as we solve that operational efficiency, we have the best customer services, we have the best services that we can compete with other international banks, we can do that. But I think the biggest problem I see is the foreign currency to allow to operate in other countries. Maybe the other thing is in terms of the universities, maybe, can I touch up on those things?
Quickly.
Okay. So in terms of the universities, I understand I know Addis University started working with Sisay and the others very, very long time ago. The one critical thing that's missing in Ethiopian universities and colleges is linkage with businesses. Abie mentioned it as well. In other countries, even, let alone the industry players, even Deloitte works with universities. So we have to allow industry practitioners to come and lecture. You have to allow to work with industry practitioners to do research. You have to allow for internship arrangements that creates employment. You have to even allow or work with the businesses to have mock exercises. In many countries, we do that, meaning before they graduate 1 or 2 years earlier, we do mock exercises with the university students. This will help them to prepare for the next stage and what's coming. But I think the curriculum, in combination with the linkage with the practitioners, would really help succeed.
Thank you very much.
Thank you very much.
Mr. Godfrey. But to what Mr. Tewodros said, in the Kenyan experience, one thing I have difficulty to understand, probably our Kenyan colleagues can unpack it, including Mr. Godfrey. One of the things is I have challenge to understand is local banks are ranking, yes, if you see it, in its, compared to foreign banks that entered. But at the same time, if you see investment, who are investing and who has the dominant kind of, still they are invested by foreign investors. So does that make them still local? I think this is the kind of thinking that I want to bring to the conversation when we say local banks are ranking. I have difficulty of internalizing this. But let me give you Mr. Godfrey.
No, well, I think The premise is, in the past, we saw a bank as a place. Today, I don't think it is a place where you go. It is an activity that you do. So how many times do you go to a bank to do a transaction? They're getting fewer and fewer.
That brings me to that, the Bill Gates quotation, we need banking, but not banks.
So it is not what it was to used to be. So in terms of competitiveness, it doesn't have to be a bank coming to Ethiopia to compete. They could still compete from far using technology. So when we look at competition, do we now look at as who is better than A, who is better than B, who is better than C? Or we look at what is your specialization, like the president said. The level of specialization then defines competitiveness as a product of who you are. So if the Ethiopian banks can define and find areas of specialization within banking, they can still be able to compete. Why do I say that with a lot of conviction? They have been in this market for a long time. They understand their customers. They understand the growth trajectory of this country. They should be in a position, at least, to be able to pull out those strands that they need to deliver certain products on the specialization level. So, in my view, there are a lot of dynamics that would support some level of competition, as long as there is increase in capital accumulation in these banks. So the capital base needs to be increased. Once that is increased, because that's the imperative of even consolidation. So once the banks are able to increase their capital either by way of retained earnings, mobilizing additional capital, they should be able to find particular specializations that will enable them to compete, because there is a purpose for which they are created. So that purpose cannot be satisfied by somebody else, somewhere else. In other words, in my conviction, yes, right now there could be issues of self-doubt. They may not be able to compete, but I do believe that they can compete if they were to choose certain areas of banking where they can excel.
Exactly. Thank you very much. That's wonderful. Dr. Jeilu. So some of the questions that are asked directed to you, or you can give your perspective, but one thing I want to add, particularly it's a great thing that the university started professional certification, including the junior banker, but at the same time in the capital market space, one of the worries is that there is no adequate, educated labor force that understands the operations, the mechanics, and a lot of things. And there is this notion that there is a specific mention in a certain proclamation or regulations that CISI, Chartered Institute of Securities and Investment Certificates, are the ones that are recommended highly, and in some cases they are specifically mentioned in the documents, which for me is a little like in a procurement process subscribing or prescribing a brand of this type. How do you take this? What's your reflection as a university that is starting a program? I know Capital Market Authority colleagues are here, which they might rally the idea into take it back for conversation, because this is troubling for those who are universities or anyone that thinks to start a program that has impact. So how do you take this? How do you reflect on this, specifically mentioning a particular certificate, and how does it affect your initiatives of creating professional certifications, particularly in the capital market space? And if you reflect on this and add on this along with the questions, I would be happy, and then we go to Mr. Abie from there.
Okay, thank you. I'll reflect on 2 points. First, I congratulate my colleague who are sitting, with the kind of job program that we have been, offering, and still maybe, continue on that perspective. I think the first thing, as the role of, the university is, for obvious reasons, the programs in all sectors, they are, a kind of generic. Of course, that has to be supported with, professional certifications that actually required. And then probably we continue, offering the degree in accounting, in finance, in economics, in whatever, field. But in the meantime, we would also like to inculcate, in addition, professional certifications for those, accountants who want really, to join, let's take, the bank, or those who want really to join, the insurance or other, financial sector. That's the idea of, the professional certification is something that can be, added to the existing, programs of, the generic, qualification, programs. Definitely, the comments given on part of, the relevance and the quality of, the program, yes, that's correct. I think that's why we are also deliberating on reviewing, all our programs, to make them, more relevant and focusing on disciplinary, multidisciplinary. And plus, we want also to excuse the high dominance of, the knowledge aspect to be, again, complemented with, the practical orientations. So that practical component need to be, strengthened, maybe through, the programs like, internship and entrepreneurship. I think for such, quality assurance, for good quality programs, the stakeholders are also very, important. Quality cannot, maintained just simply by offering, the programs at the university level. And the stakeholders, participation is quite indispensable. We have, good practices, really when students are sent to industry for internship or to practice, how many of, the industries are, positively, accept and really place, the students to really exercise, to practice the actual job. And we have really an ample of, examples where the industry is not also, ready, really, in supporting the engagement of students for such practice. So we wish industry should be also ready, really, to support and take part. And of course, the training, including, the development of the curriculum with the participation of the stakeholders, with the industry, and the practical component need to be also assisted with those experienced experts from the industry to come to the university and really also teach or train. We will really work on those areas to strengthen, to ensure quality and capable graduates. For the last point you raised with a question of brand of certifications. I think from training and learning institution perspective, we don't say that in the labor market it's only the degree or the certificate that Addis University offers is something in order to be accepted. The same is true. It's not just a single institution who should be expected really for certifications. There must be a room where others could be also take part. Here, what's important is why do we want to be really in a capital market, for the case in point. And why only maybe global professional bodies are expected to certify? I think from access equity point of view, as a matter of also right really to build the local capacity, there must be also room for local institutions even to take part in the certifications and then offering this kind of problems. And at the same time, for sustainability, definitely the system must be also open and allow the various competent and capable institutions in the provision of the certification. If an issue of standardization and an issue of accreditation is required, that's, I think it's a different thing. But coming to the certification, it is the institution that who has trained or who has offered that should provide. But the program could be accredited, a program could be standardized, that could be reviewed by the various capable or regulatory, the government organ, or others could be in place to really make and give assurance for that one. Otherwise, the certification has to be open, and it has to be accommodative and give an opportunity also for the others. Today, what we certify may not be really relevant, for tomorrow. So we should not really rely only on a singular institutions. You must have really the various organizations and the capable institutions that could also do the job. Thank you.
Thank you. Thank you, Dr. Jeilu. I think initiative of Addis Ababa University, particularly for the finance sector, and the change that has come along with the autonomy is enormous. It deserves applause, doesn't it? Now, the last, but not the least, conversation is coming to Mr. Abie, but before that, the internship concept, because it's mentioned by Dr. Jeilu. The complaint that I hear, my legs are in two places. I'm in academics, I'm in the business world. I'm very close to the industry, I'm very close to the academics. One of the complaints that I hear often, and I admit that is the truth, is internship, nobody hates free labor. But they don't think they are right laborers that come into the industry. They think they are burdens. No, if you take right people as interns and provide them possibility of employment, that's a great thing. Nobody hates. That's my understanding. So do we make sure at the system that we're sending people who contribute to the industry, or as a matter of obligation? And that conversation is a question for the autonomous university. But all over, what I heard from the conversation is that AAU, with its new mandate, needs to ensure that it's relevant for the industry as opposed to what other universities are seen in the other universities. So we have 10 minutes before we finalize, so it's going to be Mr. Abie's chance. I have a question that I did not ask you, so I have to add here, because people will kill me if I don't ask those questions. One question before that, but is, look, labor market shortage leaders, the threat from the open up, that the key labor talent will be taken by one of the things you mentioned, right? Is point number 2. No, I think it is. So they take key labors, yes. At the same time, even here, some say we are in a talent war situation in the finance sector. War for talent is practical. We are seeing it. Key talents are being taken away. It's everyday phenomena, like Mr. Abie said. Not only the new banks are being affected, but they are even affecting as a result. Those big banks who are already doing well are being affected. This has created a labor circulation. Now, my point here is, especially the top tier categories, the leaders category. Now, some argue that, because the National Bank friend colleagues are here, some argue that one of the contributing factor for enormous leadership, poaching, taking leaders from one another. When the new bank is established, then they target from others as opposed to, because they have to qualify a certain national bank requirement. And they are saying this stringent requirement is creating shortage without unjustifiable reason, so that young talent are unable, even though they are competent, they cannot enter into the leadership roles because the requirements prohibits them. So what happens is that when the news are opened, when promotions are needed, there is a limited pool of leaders in its criteria specified. And this is said to have contributed for the shortage and even salary hike for taking it people from leaders from one another. I want to reflect on this, not only as a president of Commercial Bank of Ethiopia, but also as a chairperson of the association. And for Commercial Bank of Ethiopia, what's your vision in the next few years before you finish? And final question that people will kill me if I don't ask is, the recent system glitch that happened has some noises around, and we have witnessed it. Even I was asked when I was in Kenya that what happened. And my point is, what is the learning from your experience, and how did it affect the reputation of Commercial Bank of Ethiopia, if you feel there is any? But the most important thing is, what lessons do you like to share? Because this is evident. Similar risks are, with this going to digital technology. This is going to be a huge thing to note. So what do you share to your colleagues in the banking community to take note? Thank you, sir.
You must stay overnight here. Okay. Thank you, Doctor. Thank you for the comments and, of course, questions that were raised from the room. I would also join you by thanking the university for trying to come to us, to the business, so maybe reflecting on the entrepreneurship. Really, if there is something they have learned at school and want to see on practice, all are ready to accept. CB is one of the institutions who always accept entrepreneurship requests, but they know very little, anything of the bank. As I earlier mentioned to you, it's my own experience. I was a business student, but not introduced to the banking sector, at least what the bank is. My colleague has said, we don't do on specialization. Yes, we don't expect the university to do specialized things, but some certification are important. We don't have other institutions that can do for us. That can be your part-time job. It may not be a major thing, but it is very important even to work on some certifications. But my request was just basic thing, what we have in Ethiopia. If you educate a business student, where would they go? Just classify your target businesses into some 3, 4, at least introduce those. For me, if you target that, the financial sector should be one of the list because it represents over 38% of the GDP. So where should we fall? We should be seen somewhere. We should get some space in this financial sector as a whole, not only bank. So you should introduce something for them to come from the university and not to be alien. At least they should understand what basic thing we do. We don't expect them to be special. Yes, specific sectors should develop their own experts. That's very clear. But we need a basic introduction. In place of that, there are some courses that you can leave. There are many courses, unnecessary courses we have taken in the university. You can reduce some, and in place, just add some sectors, features to describe. For instance, in medicine, internship, they learn by theory and go in practice. That's what they learn. Just like that, do for business as well. Do for engineering. Our engineers have also the same problem. We hear that they don't know what concrete is when they graduate. We have to show them practically what it is. That's what would help them. So the complaint is from all sectors. Our universities can do better. They have a space. And in the same process, they can link with the business. It is easy for the graduates also to get the job after their graduation. For the questions directed to me, regarding the merger and acquisition issue, I am not for acquisition. Acquisition is an inevitable thing at the end of the day if we don't handle the process properly. Finally, if you remember, I said, if we lose the beauty contest, will be scrapped. At the scrap time, the issue of acquisition will come. But now, I am hating that. That's why I was fighting against the process. By the way, from the question of those few people who asked it, I sensed that I am against the entry of the foreign banks. I am not. You have to be prepared for anything that you take. Zarraf doesn't work in business. Yes, we in Ethiopia, we just do our service, we make ourselves strong by shouting. By shouting, you cannot manage business competition. It needs technique, tactic, and how you do it, strategy, how to manage. You need the proper policy to handle it. Yes, if the foreigner comes maybe for the second person, I would act, there are many individuals who benefit out of opening up the market. Individuals. Some businesses, maybe. But not all benefit if we don't have a proper policy that directs those foreign banks in a manner that helps us. That is my worry. Regarding the capability of operating in other banks, other markets and opportunities, yes, we have the capability to operate anywhere. If we can be able to, of course, do the compliance. Some markets are difficult. For instance, America, we cannot jump overnight and operate there because of the serious compliance process they have. But some markets we can do. Markets are different. Not all markets are the same. Some have local risks, which we may not be able to properly manage it unless we understand. But generally, our banks can operate anywhere if they prepared for that and do it. Maybe the constraint at the moment for our banks are the capital. It needs huge foreign capital to get license. At different countries, you have to invest in foreign exchange, which our banks have no sufficient asset for that. So maybe even if the regulator are low, the banks will be limited by not able to getting, just it is considered not as opening a branch. Any market you go, it's just like establishing a new bank. So you need to invest a minimum capital of establishing a bank. That's the constraint. Earlier I said our banks have very limited capital. So the constraint could be our capital, otherwise we can do. Yes, we need a learning time. The market environment is not the same as we are doing here. It's different. So we need to train ourselves, get prepared and do it. So for me, yes, there are opportunities. There are things we need to do around that, which we are not doing at the moment. So there is opportunity and we can do as well. The merger is that it should be by force or by intentional design. Yes, it should not be by force, but it is an indirect force. Unless you raise capital in a way our existing banks cannot do, our banks never merge. This is what you need to know. Look at the Ethiopian politics. How many parties do we have? Do you know? Is there anyone who knows? It's good that you know, I don't know it. But do we need all those 68 parties? We don't. Why it has happened? Everyone who has a thought in his mind about party wants to be the president. You can't have many presidents on 3-4 parties. Ethiopia needs maybe 2 or 3 parties for politics. But we have 68 weak ones. Because individual interest always, that's the basic problem. Do we need all those banks? No. We need many board chairpersons are there. That's why we have opened all those banks. We needed the banks that we dictate to our interests. That's why we established all those banks. This is the attitude that we need to fight. This attitude is not easy. You cannot do it by choice. You do it by policy. I think the deputy governor is here. If you raise the capital, for sure, if they cannot achieve it, if they achieve the capital, it's okay. We will have 31 best strong banks. That's good. You raise the capital to 50 billion today. If they can do it, fine. We have 31 banks that have 50 billion capital, strong banks. If they can't do, they just find the way to come together, but they should do by their choice. I don't want them to dictate. If the central bank do not dictate, I prefer. Those who agree to each other should merge than mixing it. There are people I hear, when they merge, we want to dictate whom we merge with what, so that they want to change the current setup. I'm not for that. If they go by their choice, it would be good. Because business partners should be the partners that agree and work together, at least. So unless the regulator raises the capital, for sure, nobody will decide to merge. If it's the one who are ready to die, still fight until they die. They don't want to merge. So we have to do something around that. By the merger, by choice, of course, in fact, certain way of obligatory mechanism. The branch, we have done something wrong. Correction, for sure, would be costly. If you see many buildings in Addis, just if you see one good building, you may find 7, 8, maybe 10 banks on the same building. After digitization deepened, maybe customers that visit a building would not be more than one branch service. So we don't need 7 or 8 branches. Particularly Addis is the one who lose maybe many branches. So branches should be closed. 3, 4 years down the line, everyone that are opening, fighting for branch space today, competing, paying high rental fees will definitely close the branch without anybody asking for closure. So it will definitely come down, but for sure it should not be the same as Kenya, because our population is now maybe going to be 2.5 times of Kenya. So we need a little bit more than them, but not really 11,000 or 12,000 branches. Now we have, my friend said 8,000, but I think around 12,000 are the number of bank branches in Ethiopia now. I think it is too much. Maybe we need a third of it. Otherwise, 2/3 will go away after 3 or 5 years. So we need to think about it. Those who are still opening branches should think about it. There are still areas that needs branch. Don't conclude that we have covered all, but the distribution is bad. We are highly concentrated in main cities, but there are still small waradas, some villages that need banks. So we need to have bank branches over there, but closed in these very expensive areas where we are paying millions every month should be closed in the coming few years. My hospital friend, I'm very sorry for your disappointment on the banking services, but don't expect that the foreign banks come and overnight solve the problem. Unfortunately, they don't solve the problem of every institution. They will definitely be very selective. If they come, what they would do, in the first place, they don't bring big capital at the beginning. People are expecting that if we open the door, the foreign banks come in, bring in big capital, big dollar, and solve our problem. They don't do it. There are many things that need to be changed. For instance, our current foreign exchange policy needs to be changed, and our foreign exchange market needs to be stabilized. For them to bring in their money, convert it to birr, and later on convert back to dollar to take it away. If there is a foreign exchange risk where they lose in the exchange between these, they'll never bring a coin here. So we don't get additional capital. If they come and try to take some capital from me and try to give you. Would they be successful in that? I don't know. We have the saving shortage. That's our core problem. We should not just wait for the capital to come from elsewhere and solve our problem. Opening up the market, is that because we don't serve you properly? No. It's because you need more capital. That's why we are expecting the foreign banks. So to create the capital, we need to work harder. We have to avoid inefficiency. We have to develop the culture of saving. We have to educate our people to improve saving and to generate more capital. Our saving culture is still weak. Our capital generation is still weak. We are not working much on foreign exchange generating businesses. But we are highly dependent on import commodities. That is what has made our life really very difficult. And our resource is not sufficient to the consumer. That's basically our economy's structural and performance problem. This structural and performance problem, I don't expect would be solved by opening up the market. Yes, there is something that we can get by opening up the market. We may get some capital inflows, provided that we manage properly the macro variables that earlier are mentioned, the exchange rate risk issue, the inflation issue. If we can manage that properly, there is a high probability we get huge FDI when we open up the market. The foreign direct investment may improve depending on other issues. No, the opening up the market, banking sector alone is not a guarantee for the foreign bankers to bring in a capital. But we can get their service, we can get experience, we can get some improved way of doing. Just even the local bankers will definitely act and behave properly when there is a competition. That is very clear. We will try to be good for you than how we are acting today when there are a competitor than take away. That is naturally a natural reaction that would do. But there is a core problem. The core problem is the resource constraint. On generating the resource, we need to work. On avoiding import that is killing the nation, we need to work on that. And that is where we can really improve gradually. But for all your concerns and challenges that you have been mentioning, really, I appreciate it. That is a really serious problem that's impacting. But the particularly health sector, because of the lack of paying capacity of the citizen also is another problem that for which the financial sector have less appetite for health sector. Health sector in any economy, except very few countries where the payment system for the health sector is highly supported by the government or other social programs. But we don't have that for the private sector, particularly here. So it is beyond the financial sector. And so don't put everything only to the banks. There are many things contributing to your challenge. We'll try to solve as much as we can on our side. From the Addis Ababa University, I fully accept your comment. If you have really done good on the IFRS, but I didn't find any student that tells me that he knows IFRS after when they join the bank. But that's our challenge. That's what we are seeing. We thought that you are not educating them, but if you are doing so, please do it better. But there is a question you asked me, how do we position Ethio Telecom in the financial sector? We don't think that, we don't say that, at least to be politically correct, we are competing with them. We are co-opting with them. We are cooperating and competing at the same time. So the way we handle will make it good or bad. If we think that we are competing and if they try to pull our legs, then it will be a problem because they are our infrastructure. If we do the same will happen because we are their financial hub. It is we who are handling their payment, all their payments and collections. So we need to understand our respective roles and properly support each other in a cooperative way, not in a competition or in the old day like a cooperation. But this time there is competition, there is cooperation as well. So that's the way I see it. You have added many other questions at the end. So regarding the talent and the specific comment, you have linked to the central bank. Earlier, as mentioned, the talent is really a big issue. Maybe the central bank's core problem for me is allowing money banks to open at the same time, not screening the quality of the senior managers that should be assigned. So they know the market. We don't have enough talent that can lead the financial sector. Already for the existing bankers, they suffer. They see when banks present to them for the executive's approval, but allowed just 18 banks or so to be opened in a span of 2 or less years. This is a big problem for me. It created a huge problem on the financial sector. Some exception can happen. Yes, there are some juniors which may not fulfill the central bank's requirement, can be better than those who are considered to be senior. That I fully agree. Maybe I'm one of the witness. I was one of the exception for the central bank. At the time when I was appointed as the CB's president, I had only 7 years and 7 months experience after university graduation. At that time, the NEB's requirement was 5 years on senior management position and the other 5 years as banker. Together, 10 years banker experience was the minimum requirement. I fulfilled none of them. But central bank accepted my appointment. I'm sure I didn't fail the central bank. Though I had only 6 months leadership experience when I became president of the Commercial Bank of Ethiopia. So they need to look into some exceptions. Not all can do the same, but some exceptions are required. But there is something I see. At that time, the central bank's core requirement was expertise on credit, because credit is, I think, was currently, of course, it's a little bit challenging. I will explain later on in relation with the question you asked me at last. But credit is about 80% or 90% the bank's risk. So leaders of the bank should know at least credit very well. But now central bank compromises that, but fixed the experience in years instead of in areas of expertise. I prefer their previous experience where they focus on core areas, core risks. This guy have got knowledge on the core areas. Basically, that is more important for me than this very objective. Of course, this is the current criteria they have is very objective. They don't dispute with people because it is mentioned in years. If you achieve it, achieve it. If you don't, there is no subjectivity, so there is no dispute. They are relieved from disputing with some boards and some heavy muscle people. But the risk management of the financial sector is compromised in my view. I apologize for my deputy governor here. Hearing it is better if you go back to your previous experience, which is really good. That reads the substance of the matter. Is this person capable of leading the bank? That's very important than putting everything to the year of service, sometimes useless years of service. So exceptions should be allowed in my view. Vision, I don't know, should I tell you my vision? That is only for CBE. So a little bit a difficult question that you are asking me, but I have to say anyway, since you have mentioned. CBE is working a lot. I should not mention my vision. Maybe a particular vision I would have. There is a big challenge for the financial sector, just where Commercial Bank of Ethiopia also included at the moment. People talk about the foreign bank comes. When they come, the biggest business impacted earlier, we have said corporate. The other thing is international banking. Currently, we don't have any local Ethiopian bank who could serve us as a correspondent bank, who can do a correspondent banking business, who can do confirming LCs. I wish Commercial Bank of Ethiopia do this. Is a liberation for Ethiopian banks to come out of the problem where we are. And that is my vision, basically. The other thing is the trade vision, which we do, and I should not tell the detail. We need to work hard, and CBE should come up to that challenge and stay and operate in the overseas market that earlier asked, and be able to serve the economy by being at least self-sufficient, do our import by our own. CBE is doing many things to be resilient, to compete if any foreign bank comes, even though I have earlier mentioned to you as Bankers Association chairperson that I didn't understand what's going on to help the financial sector guide, but I have done my own scenarios, different scenarios, and we are prepared for the foreigners to come. But the only thing I would ask is, if any foreign bank comes, they should be obliged to do what I'm doing. If the government obliges me to follow just like a policy bank, serving different corners of society, any bank that comes that compete with me should do the same. If they don't do that, I should be left free and act with them to play. That's the only thing I would ask. Otherwise, CB is very ready to compete with any bank that comes to Ethiopia to compete. That's in short what I'd like to say. Maybe the last, you have mentioned the glitch issue. Because you don't have much time, you are looking into your mic, I have to make it short. The glitch issue has two sides of it, the bad and the good. People are talking about it, and of course on the media, yes, there were some bad narratives that were going around. I believe we have managed those challenges. Something that everyone should understand is we didn't face any external attack. That's what we have said many times. Our employees has made a grave mistake. The mistake is they didn't follow our existing procedure and made a mistake because they felt that they have mastered everything and what they were doing was very small and jumped our routines and our routine step and made a mistake. That's how the error has caused. I heard some, sorry. Sorry, excuse me. I heard something about the pilots. I don't know how much of you knows. Just heard together with this issue. Normally, at least two pilots drive a plane. One is senior, one somehow average. Mostly when they start the flight, mostly the senior does it. But the junior, what the junior do is, the junior dictates with a list what button to hit. The senior who has been driving for some maybe 30, 40 years knows very well the process, but it is a procedure. It's a mandatory procedure. One dictates and other do. Normally, that kind of strict procedure is very critical. Sometimes crash happens because they override that. Just exactly we have faced the same. We have the same procedure that should be done internally, but somehow they felt that they have mastered everything and failed and jumped that step and made a mistake. So we have learned a lot out of that. What we have done, the good thing is we have learned the problem at the middle of the night. We have stopped the damage just 2 a.m. in the morning, 2:40 minutes, the system that has created problem disconnected. It was known that that new application that was applied at near 8 p.m. in the night had a problem, had caused a problem. And those damage created within that period, in a very short period of time. Silly mistake, silly error, very small software, only it does reversal of transaction. The reversal was designed to reverse incomplete transactions, but it reversed every complete transaction, be it complete or incomplete. It reversed every transaction. And instead of reversing the incomplete ones, because one if was pasted in the wrong place. There is a program. If this happens, do this. If this happens, this is how the program is written. So when the programmer implements on the core system, it's wrongly copy and paste in the wrong position, then the if when it is incomplete is pasted in the wrong position, then it reverses every transaction. That's what has happened. And everything is happened internally, and the system function properly on all the resting, other than that reversal, which replenish the drawer's account. Every time it transfers, the reversal replenish the account, so it multiplied the money, unfortunately. So for us, I think people knew better about CBE after this incident. yes, there is some sign of repetition, particularly globally, not more than the local challenge. The global challenge was severe because the global stakeholders were very much sensitive, much more than the locals. Our locals, just they don't go more than the news, but the global know such problems. They have experience of this problem. Such experience, normally such problems create huge damage. Sometimes the failure of banks. So they know that, and they were very much frightened by the cause, and they a little bit concerned about it. So that's what we have noticed. But anyway, in that process, we feel that we have shown our customer that they were fully secured, and the bank is strong enough to withstand. Even if that money was lost, it was not big for CBE. Even if it is fully lost. And we have managed the problem at that middle of the night before it is too late. We have resumed business in a very short time. Normally when there is a system crash, banks go out of business for several days, if not weeks. But we have done it within 4 hours. Within that 4 hours, we have solved it. The problem, it didn't take us much to solve because it's a very small system. It's just only reversing. But within that period, we have blocked all those transactions. 492,000 plus transactions that happened overnight were blocked, not to lose the money. And that's how we have managed it. And then we understood the whole problem. Of course, understanding the problem is also a big issue.
Exactly.
And we reinstated the business and compensated the hours that the customers lost by allowing the business to operate until 2 p.m. in the night of the same day. And then we have communicated the problem to the public. Of course, we have collected over 95% of it in 4 weeks. As of today, we have recovered 98% of the lost money. No money lost in Ethiopia is recovered 98% in 2 months. You don't find elsewhere. We have done that. This shows how strong CBE is and what CBE can do. I think nobody dares to take money from CBE hereafter. They understand what we could do. So some problem happens sometimes, but even maybe it is for good. It has shown what CBE can do. So for me, yes, there were constraints, but it has shown CBE's resilience as well as CBE's strengths and how to recover the money, and no one can kid with CBE hereafter. They knew what they would be done. Even from our customer side, the impacted accounts were about 25,000. Out of that, 24,554 of them have fully paid, and now they are with credit balance of 287 million out of as of yesterday. They are still depositing with us. We have about close to 300 million only with those accounts. So if there was a reputation problem, the first big challenge would have come from the customers who were impacted. Even those who were impacted understood that it was CBE's right to do whatever around that. So yes, there were some negative things. Equally, I saw there were also positives. But for the society, for the banks, my colleagues around here, what I would like to share as experience is the incident earlier, as mentioned, has given us a big lesson. What you should take care of is in IT, there is nothing trivial, nothing silly. Every process you do in system changes, system enhancement, system management, you should seriously follow like stupid. Don't change any jump as if you don't know anything. Do everything the same every day. That's what I would like to advise. So the risk in financial sector is now serious. Earlier, when I was talking about the financial sector risk, credit was the biggest risk. But now, IT risk is closer to that because in a very few hours, anything could happen. The financial sector is highly connected. I couldn't even imagine where the money has gone overnight in that very short time. Many places where I never imagined our money was there. Betting companies, different things which I don't know how they were operating. So as the sector is extremely connected and the environment is extremely fluid and very open, any crack on technology side would create a huge damage in a very short time, so as very much severe than the conventional credit risk we know. So we need to seriously handle the risk that comes from the IT. We have one team that does the money. We have 3 monitoring teams, but one team, the fraud management team, who were relevant for this task, was on break at that time. We learned a lot. We made a great mistake for not putting that fraud management team 24 hours on site. Now, since then, they are on site. They are monitoring. So there is no safe time in the financial sector at this time. As long as you have the digital operation, access to your system, day or night or any time, your system is accessible. So you need to provide the same resources at all times. Thank you.
Thank you, sir. Thank you very much. Thank you very much. I think this is a huge lesson that we learn, and also why I happen to be generous in time, because he wears double hat. I represents the banking sector at the same time, the largest bank in the country. So you understand the excuse. Few things and I wrap up. One, he to the National Bank colleagues, if we stick to regulations in terms of ages, experience only, something, we might have young people who are ready talents who could have helped the banking sector in terms of dynamism. Like Mr. Abie said, he was exception, but there are many who were not able to get that exception, but still capable, competent, energetic. So I think that will be relaxed a little bit. That's my appeal. And the second thing is, now the system glitching to the university situation, it happened, I think I heard, in universities. And what shocked me most, especially the money, I mean, students were involved anyway. It came to me as a shock as a university colleague, and also as someone who is in a talent domain. If we are producing this kind of university students who line up to take a money that's not yet theirs, line up an hour or two, call each other to line up and collect money that's not rightfully theirs, that came to me as a shock of my life. And I think it does to you too. And what is being done in universities? What kind of education system? What kind of morality are we teaching? And I think we need to imagine these guys come as leaders, as politicians and policymakers. What's going to happen? It's just a sample. And luckily, it was like few hours. What if we haven't seen the worst? And I think it's time to think as a country, as a nation, as universities, as educators. What are we really doing? Time to reflect. And congratulations, things are back on track and everything is okay. Nothing big damage, money recovered, and that's a good news. So next year, as a Bankers Association, would we see the logo here as the association? We haven't seen for the last 6, so, you know, I'm committing him here. So, do we see the logo next year here? Let's hope so. No commitment. Okay, I hope so. Yeah, thank you very much for your patience. This is like 101 for the whole questions that we asked. It's education. So, thank you for the great presentations we had, for the panel discussions we had. I wish we had more chance to ask more questions, but I don't see the need. Everything is addressed. So we take pictures, and I want you put your hands together and say thank you very much for this wonderful panel session. And we take our pictures. We leave you to have a great evening, and come tomorrow morning, 7:30, if you don't want to leave late in the afternoon. Okay, 8. I'm being generous. Okay, So we take our pictures with the panelists here.